The problem about sell-offs is that if you get into a situation where things are really attractive and you have some real opportunity, if you don't have any liquidity, you can't take advantage of it. All you do is move, from one box to the other. And so one of the things we mentioned back then, which is still the case today, if you look at it, we haven't had any market movement since I last talked to you to speak of. Matter of fact, the NASDAQ and the Russell are probably lower than they were 2 months ago. But the thing about it is it probably doesn't show up until the second quarter. I mean, the Fed now is locked in. They have to raise in March after today's numbers, and probably February too, if you just look at what's happening. But you have to keep this in mind. Again, that's all looking backwards. You don't have any of the stimulus that we had last year. So if you look at the consumer, they're going to be under pressure. And I just ran the numbers today. If you take a $400,000 mortgage today, it'll be up 20% from where it was a year ago on the payment now.
Wow.
And so things will change on that. And so if you think the payment goes up 20% and the home goes up 20%, all of a sudden we're into territory where you lay that out and that blocks that down a bit. Then you've got a situation where the Fed will probably raise into a slowing economy, which they always do. They're always late. And you can't really believe them because they're always late to everything. And so what happens is they're going to raise into a slowing economy. Then all of a sudden, oil takes it, oil's a tax on smaller people, on the 50 or 60% that have to go week to week. It's a tax. And so we see us slowing down, not necessarily going away, but we see inflation really coming off after the first quarter, second, third quarter. We see that happening, and we think it'll impact the markets. Say we're at 7.5. Yeah, maybe you could go all the way back to 1 or 2, but certainly I would think you would come back to 3 before it's all over with. But just the economy just couldn't stand it. And we've already had rate hikes globally. We've had 40 rate hikes in developed and emerging market countries in the last 8 months, 40. And then in addition to that, here we are, people talking about raising 5 times this year. We don't think they've got a chance at that. 1 or 2, maybe. But even then, if you stop and think about it, it changes the whole look of everything. What happens is, if you're into a slow, these things happen at the tops. They don't happen at the bottoms. And I don't think we're in a position right now where people are they're not keeping in mind that one of the things that happened last year is people had the money to pay up for things. They could pay up for inflationary things. This year, it's a different story. There's no free money coming from either source, fiscal or monetary. They're in a situation where they spent a lot of what was there. And so the market itself locks it down. So if you have $90 oil, real estate up 20, 30, 40%, depending on how you want to do the payment, you look at all these things put together and what they're having to pay now for groceries, and you look at it and all of a sudden it slows itself down. That's our point. As you get past this major spot where we are right now, which is probably, I'm guessing February comes in just like January, but as you get into April, May, and June, and then further, that should roll down. That start down. If you look today, for example, if you just look at the difference between the 10-year yield and the 30-year yield in U.S. Treasury today, it's 1/4 of 1 point, a quarter. You're so close to being completely flat that anything else they do, which is probably March, will invert that curve, and here you go. That gets it started, and I think that's where we'll head from there. Well, the problem is the Fed caused it. So everybody wants to look back and say, well, they're the great, but they're going to come to our rescue. Well, they're the ones that caused it in the beginning. And secondly, they're not going to have anything to do with it being over with, because the market will take care of itself. Right. And then, they can stick their chest out if they want to. But what really will happen is the market will take, it's one of the good things about me is I grew up in all 3 socioeconomic levels. I know what goes on with people that go week to week. I know what's in their head. And so when you have those kind of cost increases, you quit buying things, you quit going places. And that's what will happen this year, we think. Well, they want inflation down, and so they'll get it, I think, in terms of what they're looking for. The problem I think you'll get into here is that the Fed can't pivot at 10% down on the NASDAQ, for example, or the Russell. we think you'll have to go deep because, see, they're locked in a box. They're saying, well, we're going to fight inflation. And they're right. They're on the precipice of when you go the other way, but it's still high. So you can start to have breaks in the market in the second quarter, and they can't do anything until you get down to maybe 25 or 30. They could do something then because they'll say, well, it's enough. We'll make a change. And then all of a sudden the administration will be worried about that side of things. So that's the box they're in right now. And that's the way we see it. Why wait so long? I mean, one of the problems the Federal Reserve always has is they're late for everything. And he knows this. He's been around long enough to know this because he's been on that board for a long time. And yet we wait and wait and wait. And I think all of these Fed presidents have gotten this idea that, hey, I've got this under control. Don't worry about it. Well, they really never have it under control because they're always late to the game on everything they do. They juice it too much. That's what they did last year. My question to him is, why would you do that for? Were you just under political pressure? Or, I mean, you had enough stimulus out there without having to just keep on buying paper all year long. I mean, 120 billion a month when you had mortgages already at all-time lows. You're buying 40 billion mortgage MBAs a month. I'm like, why would you be doing that? And that would be my question to him is, what are you thinking about? Well, I think that's right, Dave. But obviously, again, they missed it on transitory. Now, see, we owned a lot of energy starting 18 months back because we really thought that was going to happen. It was not going to be transitory. We thought the major parts of that inflation, which are energy, real estate sort of thing, all that sort of, they were going to go higher, which they did go higher. And, we could see it happening, but they were hard-headed to say, hey, we think it's going to be transitory but everybody else was looking around and saying, well, it doesn't look like it. And so now they're stuck. And so they have to come in and be harder. But I think they're late. I think it'll backfire on them before it's all over with.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.